Shares in Ford moved lower after the automaker missed quarterly revenue estimates after the delayed delivery of 60,000 pickup trucks. The delivery, however, is expected to happen in the second quarter, and our guest sees this as a potential comeback for Ford. Now, the street generally has a hold on the stock, but he says buy. He sees the shares rising about 30% in coming months. We're joined by Mike Ward, Managing Director at Freedom Capital Markets. Mike, thanks very much for coming on the show. Investors seem cool, or at least the analysts seem cool on Ford right now. Why is that?
Well, Ford has had trouble getting product out the door, producing them. And certainly the 60,000 units in delayed deliveries of the F-150 pickup trucks is a negative. However, when you look at the way the industry works, every unit produced to a dealer order. The dealer are the customers of Ford. And while they weren't delivered by March 31st, they're delivered in April, and that's $3 billion in revenue. So that revenue shortfall you're talking about hits in the second quarter while all the costs were absorbed in the first quarter. So you have a big second quarter coming up.
Big second quarter, they're catching up. What kind of production problems did they have, Mike?
Ford has had a number of problems over the last couple of years, everything from the component supply shortages to coming up and missing. I mean, one year they had a problem getting the blue oval delivered on time. So vehicles are very complex to build. People forget. You remember about 5 years ago, Tesla, who everybody loves to and gives them accolades. Tesla, Elon Musk was sleeping in the plant to produce the units. Vehicles are very complex, and so you can't give Ford a pass for missing that production. But on the other hand, it's part of the business in producing vehicles. It is complex, but they will get it done. I think more importantly, when you look at the stock, I think what the market is missing on Ford and missing on General Motors as well is we're in the early stages of a cyclical recovery. Normal demand in the United States is 17 to 17.5 million units, not 15. Both GM and Ford have reduced their break-even levels by 50%. Their balance sheets don't need to be structured. Their product or revenue doesn't need to be structured. Their cost doesn't need to be structured. So for the first time that I've seen it in the 4 years that I've covered it, you don't need this restructuring as you're heading into an upturn, and they're already generating a ton of cash that they can be applied to product investment or return to shareholders.
Ford got a lot of publicity over their electric truck, the Lightning. Has that worked out so far? I mean, Bloomberg reported the other. Oh, sorry, tell us, the truck itself, has that been a success?
No, it is not. And part of that is because the Lightning was basically a remake of the F-150. They put an electrified powertrain on the bottom of it. They do have a plant that makes them. It is a truck in that regard, is a very good pickup truck. I think when you're looking at electric vehicles, electric vehicles are coming. Are they going to be 30, 40% of the market? No one knows. The one thing I do know is that the commercial side of the market, pickup trucks and vans, just the use case is very favorable, and you're going to have a lot of social pressures on customers like Amazon, like FedEx, like UPS, your local contractors, post office. Those are GM and Ford's stranglehold. GM and Ford dominate commercial pickup trucks and vans with about 80% of the market. That's where they're investing in EVs. So Ford, I think we'll see them grow and invest, and people make a big deal of them losing $5 billion on EVs. That includes a lot of product development expense, $3 billion or so of R&D investment. The numbers are the same as Rivian. The numbers are the same at General Motors. In early stages, that's what it was like for Tesla when they were starting out. There was a lot of initial investment that goes in. So the question becomes, do you think EVs are coming or do you not? I'm in the camp that they are coming. And they're going to be, especially in the commercial side, pickup trucks and vans where GM and Ford have a very strong market position.
Yeah, Bloomberg reported the other day that Ford vans are doing just fine. These delivery vans, these ubiquitous white vans, the electric versions are very popular with commercial customers.
No question. And if you look at Ford Pro, that's they started breaking out some of the performance. That's where you had upside in the quarter on performance. Ford Pro had $3 billion in EBIT income in the quarter in 3 months, so $1 billion a month. And Ford Pro has an enormous customer base, and that's where those electrified commercial pickup trucks and vans will go through. They'll go through Ford Pro, and that's where they have the service and the distribution and the client list to sell to. No one else, it's unequal across the marketplace that Ford has on the commercial side of the market.
So you reckon that, let's put up another stock chart for Ford. I mean, it hasn't done that. It's up 10% in the past year, but down from its highs.
Right.
The stock around 13 right now, you reckon it should be trading at 17, or there's a case to be made it should be at 17?
Absolutely. And just look at one simple stat, surplus cash. The autos are a very capital-intensive business. Ford's generating over $500 million a month in surplus cash, operating cash flow, less capital expenditures. That gives you enormous flexibility. And again, they don't have to restructure the balance sheet. They don't have to restructure costs or product. They're in a very strong position in that regard as we get into as we continue this increase in the new vehicle cycle in North America. And Ford is in a great position to benefit.